Hey there, traders, and welcome back for episode 95 from the StockBandit.tv. It's a place you can always find trading videos to make you better. Now, before I go on, I want to make sure that you're watching this in full screen mode. That gives you the best, highest quality, so you'll be able to follow along with what I'm showing you on these charts. All right, so in this episode, what I want to do is I want to talk about reversals and how they can happen. Now, they don't all happen this way, but we're going to take a look at a couple of stocks which might be in the process of reversals after uptrends, but they still have some proving to do. And as we look at these two stocks, I want to show you a couple of differences between them. And both characteristics can be meaningful, but they're two very different animals, so they're both worth examining. Now, up first is FUQI. And this stock has made a tremendous run from the March low, which is right down here. This thing was near $3, and it recently cleared $30. So obviously that's an incredible run. That's over 1,000% run over just the course of a few months. And so if from these levels up here, this stock happens to turn lower from here, even just for a little while, you know, who could blame it? So let's take a look at the prior corrections in this stock and how this might be a little bit different. And I need to clarify here, I'm making zero predictions at all. The chart is going to be my guide, but I never argue with it, okay? It's if this one does happen to turn and move higher from here, then I'll abandon this idea that it might be topping. But here's what we have right now. As we take a look at previous pullbacks within this uptrend, we see these pullbacks have been pretty methodical. There's one in the stock bounce. It pulled back again very methodically, rallied once again to new highs, and then very methodical pullback here. So we're establishing that this stock tends to correct and base in a pretty methodical fashion. However, this yellow line right here, now it's red, I just drew over it, but that to here represents a big gap in the stock that we just recently saw last week. That was a different kind of a correction. We actually kind of rolled over from the top here and then we gapped down. So that was a little bit deeper, sharper type of correction, a little bit of a change of character. Now also, previous dips, in fact, here's a gap down that we saw in the stock right here. Immediately the stock reversed back higher. Well, this one's been kind of languishing here for several days, and then today it did turn higher. And essentially what it accomplished today was, let me just zoom in here a little bit on the chart, all it did was fill this gap. So now that gap has been filled due to today's upside price action. However, the stock did not climb higher once it filled that gap. And so it filled this gap and nothing else today. Now, one other thing I want to point out here is that I want to draw a trend line here, which the stock has just now approached, okay? So now we've got a couple of different levels here that both coincide in the same area. We've got today's high, which corresponds with the beginning of this gap from last week. We also have this descending trend line here right off the top, which also touched this particular bar and is now touching today's bar. So if we do get a close back above this level right here, which is about the 2740 area, then obviously all bets are off and this thing could climb higher once again. But if we don't see a good close above this 2740 area, then this thing certainly could begin to roll back over and put in some corrective action. And again, after such a tremendous run, who could blame it? So with this trend line being approached from below and this gap now being filled, we have a very important level here to be keeping an eye on in the days ahead. So that's certainly one to keep an eye on. All right, another one that I want to point out is RL, which is Ralph Lauren. And this one just saw a move from this 49 area up here to the 7130 level. And that's well over a 40% move. I believe that's about 44%. So from the August high, what we've done is we've seen this one kind of roll over pretty sharply, and then the bounce that's taken place has really stalled out and is now starting to show a little bit of weakness with today's bar. So the stalled out bounce now puts this stock in danger of creating a lower high here, obviously, compared to the high that it just established. And you know, if that obviously sees follow through, and we see especially a move back down underneath this level right here, which is a 63 area, then we've got a trend change taking place, and this one will of course be vulnerable to further downside if that happens. Now I want you to note that this one did turn higher after multiple attempts at this support area back in July. But up here, if it does happen to turn lower, it'll be because it was unable to achieve a new high, and so a failed bounce within what is still an uptrend is a major warning sign. So this is definitely another one to keep an eye on. And again, I just want to be clear that I'm not saying these stocks are going to crumble and tumble. What I am doing is just analyzing the charts for clues and potential changes of direction. But the price action is going to have to confirm what the charts appear to be telling us right now. And again, if that does not take place, then it's on to the next trade. That's my method. All right, thanks for joining me for this episode. I will be back soon with more videos, but until then, trade like a bandit.